reports, but they are not two distinct categories of business. Every business is worth the present. If you knew what it was going to be able to disgorge in cash between now and Judgment Day, you could come to a precise figure as to what it is worth today. Now, elements of that can be the ability to use additional capital at good rates. And most growth companies that are characterized as growth companies have that as a characteristic. But there is no distinction in our minds between growth and value. Every business we look at as being a value proposition. The potential for growth and the likelihood of good economics being attached to that growth are part of the equation in evaluation. But they're all value decisions. A company that pays no dividends, growing 100% a year, is losing money now. That's a value decision. You have to decide how much value you're going to get. Charlie, do you have anything further on growth and value, etc.?
Well, I agree that all intelligent investing is value investing. You have to acquire more than you really pay for, and that's a value judgment. But you can look for more than you're paying for in a lot of different ways. You can use filters to sift the investment universe, and if you stick with stocks that can't possibly be wonderful to just put away in your safe deposit box for 40 years, but are underpriced, then you have to keep moving around all the time. As they get closer to what you think the real value is, you have to sell them and then find others. And so it's an active kind of investing. The investing where you find a few great companies and just sit on your ass because you've correctly predicted the future, that is what it's very nice to be good at.